Nasdaq changed the rules less than a week before this IPO was announced. And because of that change, if you have a 401k and index fund, basically any retirement account with tech exposure, you are buying SpaceX in 15 days. Not if you want to, not if you choose to, automatically. First, what is SpaceX actually? Most people think it's a rocket company. It's three companies that got packaged into one IPO. Starlink, the good one. Satellite internet beaming down to the whole planet, millions of subscribers, actually profitable. This is the crown jewel. And then we have the rocket business. Really extraordinary, reusable rockets, Starship, nobody else on Earth comes close. This is the moat. This is why people believe. And then there's the AI division. Earlier this year, SpaceX absorbed xAI, Elon Musk's AI company, which means you're also buying Grok, the X platform, and an AI business burning through approximately $1 billion every single month. At $135 a share and a 1.75 trillion valuation, you are buying all three, including the one losing $1 billion a month. And SpaceX as a whole lost $5 billion last year. That's not a rumor, that's in the S1 filing. Here's the thing about IPOs that doesn't make it into the headlines. When you buy SpaceX tomorrow, you're buying from someone. SpaceX has been private for over 20 years. The venture capitalists, the early employees, the insiders, they've been holding this for a decade, waiting for exactly this moment. Tomorrow is their exit. There's a term for what retail investors become in this situation. Exit liquidity. You are the buyer that lets them finally cash out. That's not a conspiracy. That's the structure of every IPO. The question is just whether you're walking in with your eyes open. On day one, less than 5% of SpaceX shares are available to trade. Out of 13 billion shares, only about 555 million are in the float. The rest are locked. Insiders cannot sell yet. Tiny supply plus massive demand equals a day one price spike. That's the excitement everyone is feeling right now. It's real, but here's what comes after. Starting 70 days after the IPO in waves through December, those locked shares get released. 20% here, 7% there, more at 90 days, and more at 105 days, more at 120 days, full unlock in mid-December. 6 months of insiders who got in years ago at a fraction of this price, legally allowed to sell, in waves. Airbnb, Robinhood, Rivian, Coinbase, every single one of them had a day one spike. Every single one ground down for months afterward as insiders cashed out. And SpaceX is not automatically different. Now, here's the part that made me stop. Normally, a company has to wait years before it qualifies for the Nasdaq 100. That waiting period exists so the market has time to figure out what the company is actually worth before every index fund on Earth is forced to buy it. Nasdaq changed that rule less than 1 week before this IPO was announced. The new rule let SpaceX qualify for the Nasdaq 100 just 15 days after going public, which means every fund tracking that index, every QQQ, every Nasdaq index fund, every 401k with tech exposure automatically buys SpaceX on day 15. Not because you chose it, because the fund has to rebalance to match the index. Look up the date the rule changed. Then look up the date the IPO was announced. The sequence is what it is. This creates a wave of guaranteed forced buying right now when early investors need buyers most, right when the float is still tiny, right when the price is at its most inflated. Your retirement account becomes the support structure for their exit. SpaceX is a real company doing real things. Starlink is genuinely changing how the world connects. The rocket technology is historic, but here is the difference between a great company and a great stock to buy on day one of its IPO at peak FOMO. The people who are going to make the most money from this were already in. They've been in for a decade. Tomorrow is their day. For everyone else, the stock will still exist next month. And in December when the lockup waves hit, and next year when there are actual earnings reports to look at, patience is not the same as missing out. That's what the data actually says about the SpaceX IPO. If you're watching this before tomorrow, good, now you know. So what is the actual play? You do not buy tomorrow. You let the venture capitalists sell into the retail hype. You let the tourists chase the day one spike. You wait for the dust to settle. Personally, I'm entirely avoiding the opening bell. I'm waiting for the post-type dip. The mathematical floor is likely somewhere between $128 and $132 after the initial euphoria burns off. The S&P 500 is not fast-tracking SpaceX. The real institutional buying will be methodical. Your buying should be too. Put the lockup expiration dates on your calendar. Watch the volume. If you want to test the waters, paper trade it on Webull. Watch how the volatility actually moves. Don't rush in blind. Do not be exit liquidity. Stay awake. See you next time. Not